Let's translate that now. I think the message really is a very varied outlook around the world and a particularly slow recovery in the US, both in economy and property terms. How does that relate to Australia and Queensland? Well, last night I was watching Anna Bligh on the TV and she was on the phone to the weatherman asking about the storms that are apparently going to hit Queensland this summer. And I got to thinking, well, didn't she just see the storm that's been going on for the last 2 years, the economic storm that's hit Queensland? It's been particularly large. It's caused a lot of damage and it's going to take a number of years to repair. We think Queensland has had a particularly special set of circumstances that has left it very exposed to the global financial crisis. We think that the exposure to the mid-tier banks has left especially the property industry particularly exposed. And interestingly, now that many of those banks have been taken over by the big four, with new restrictions coming in place and national restrictions, it'll be interesting to see how the credit does flow once things start to improve and just how restricted it continues to be into the longer term. Housing construction and the activity that flows from that is a really critical part of the economy in southeast Queensland. And we can see from the statistics that the housing sector has been particularly hard hit here in Queensland. And slow housing, of course, exacerbates the situation in the retail sector. And so it is that it's followed that the retail property sector has also been particularly hard hit here. Of course, Queensland is very exposed to tourism, one of the great strengths of the state. But again, the high dollar has reduced visitors to Australia and sent people overseas. So again, you've got a critical exposure there to a part of the economy. I guess what Brisbane is dealing with, which many parts of Australia are not dealing with, are some elements of oversupply in the office sector and in luxury housing. It's going to take time to absorb those elements of oversupply. So these certain factors have come together. Is it the perfect storm? Well, it's quite a big storm, we think, that's hit Queensland in the last couple of years, and very much the theme of today is how long it was going to take to recover from that storm. This chart shows you what our forecasts are, the numbers that we rely on in our forecasts for the property sector. It really shows a massive deceleration of economic activity in Queensland from over 6% growth just 2 years ago to less than 1% in 2009. Now, this is a rapid deceleration. If this was an average growing economy at around 3% and you had a rapid deceleration like that, you'd effectively be in a deep recession right now. And I think the economy is effectively feeling very similar symptoms to a recession because of that rapid deceleration that's been experienced. We think the economy is starting to turn around now, and we think there'll be average growth this year and a little better next year. But it's really not until 2012 that you really start to see the sort of much stronger growth that Queensland is famous for. The sort of 4% plus is really what you need to see before you start to see the property indicators really showing more strength and more direction. I think that's a pretty common theme that you'll see in the forecast that we'll present this morning. But you know, Queensland is a growth state. A lot of those factors that I outlined a moment ago are actually temporary. They will change, they will turn around. And if you go out just a 5-year outlook, you start to see that Queensland will be ranked second once again in the various states and territories of Australia in economic growth terms. Now, 5 years is not really that long a time in the property industry, but it will be a couple of years of recovery within that 5 and then starting to pick up in the last 3. So we've still got a lot to deal with. Employment's been one of the great indicators in Australia that's picked up in this recovery, and I think it contrasts most heavily with what's going on overseas. I mean, you've got employment in the US just starting to come off the bottom now. You've got Europe just going into its austerity measures and actually reducing employment in the public sector over the next couple of years. But here in Australia, we've added over 350,000 jobs in the last 12 months. It's interesting when Bruce says, you know, we're not getting the message through. I mean, people want to see the evidence that there's been a turnaround. Well, to me, that's one of the greatest signs of evidence you'll ever see, 350,000 jobs at a rate of about 25,000 per month over the last 12 months is pretty impressive. Now, Queensland's been working somewhat counter to that, and I think the effects of especially the stimulus package were welcomed here. Things like the building education revolution had a big impact on Queensland, but now that funding's fading out during this year, you can see here that the monthly growth in employment has actually come back in Queensland in the second half of this year. And we think it's being certainly felt in the office sector as well, in the leasing inquiry and activity. So where we go from here, well, I think Queensland's really waiting for that one big sector to come back and start to turn around these employment numbers. And that is, of course, resources, and mining is going to be so important in this state in the future. We've looked at Western Australia, for example, and looked at all the projects that are in the pipeline there and plotted them out into the future. And you can see the pattern of change which is forecast here. So this is actually quite an amazing chart. The dark blue area is all history. And you can see that this was the boom time in this around about 2007, 2008. Now, if that was the boom time, look what's coming up. Something that's about 5 times the size in terms of the amount of investment and construction activity is forecast through the mining industry in Western Australia. Now, in Queensland, it's not terribly dissimilar pattern to what you see there. We know that there's about $60 billion of investment in infrastructure and construction that's in the pipeline or just starting to get underway in Queensland already. Now, that represents about 25% of the economy of Queensland. And that's a significant driver of activity and giving direction to the economy. So that's what we're all waiting for, and I think that's going to be the big important driver of the Queensland economy, especially around the next 3 years. I think around that 2012, 2013 period, you'll start to see the effects of this starting to come through. So we're just in that transition phase now between stimulus and the private sector starting to come back. It creates nationally, it creates for us a sort of a 2 city sets of recovery. We think stage 1 of recovery nationally is going to be in Sydney, Melbourne and Adelaide. Markets that certainly didn't suffer any type of oversupply. They're sort of straight into strong employment growth and property indicators starting to turn around from next year. The second phase of the recovery will include Brisbane, Perth and Canberra. And we'll go into Brisbane obviously in more detail in a moment. And that really starts much more strongly from 2012, as you'll see. But there are a certain set of issues which will shape the outlook for Brisbane. We know that there's this hangover of space and opportunities to absorb. We think that's going to take a couple of years. We think there's a fear of a housing price bubble in Queensland, probably like nowhere else, and it's probably affecting confidence and is pulling back some decision making right now. We certainly think there's a lack of confidence in the state government here, and it seems to be a low sentiment toward the government, and again probably pulling back decision making for the medium to long term. The other factor, of course, is that it's a great positive, but it can also be a great negative, and exposure to one industry is a big risk, and we recognise that. But don't forget too that South East Queensland is about to tip over the 3 million people mark. Now, that's quite a sizable critical mass, and when that does start moving, when that housing construction starts coming back and people start moving back into Queensland in bigger numbers, we think that critical mass will really start to move the economy again from around about 2012.